John indicated, I'm the founder and CEO of Intel Store. In case you're not familiar with us, we're a market research and consulting company that's been in business for 10 years. And we partnered earlier this year with Reuters and Reuters events in order to bring you not only webinars such as this, but market intelligence across the entire spectrum of global renewable energy. So what we'll present today is an update on the past 20 years of market growth, as well as some projections into 2020 and beyond. Obviously, as we come to the end of this year, we're still anticipating a tremendous amount of growth potential for renewable energy. And we'll be talking today through a lot of these different bullet points. So the good news for renewable energy globally is that with the exception of, I believe, a hydro project in Africa that came offline in 2002, the market has been growing at a steady net positive compound annual growth rate over the past 20 years. And based on the current projections that we've been able to come up with, it's looking like it will continue to trend upwards. There are a number of factors contributing to this growth, which we will discuss in more detail as we step through each one of the renewable energy fuel sources and technologies that are in use. But overall, the market is looking very, very positive. In terms of market share, so the ranking table on the left is listing all the different renewable energy technologies and sources. The data that we've obtained comes from a few different places, and I'll be able to explain in a little more detail as we step through. But what we've been able to do is through aggregating information that's been made available by various governments around the world, as well as our own independent research and validation. This is what we've been able to come up with in terms of the overall contribution of individual renewable energy sources. For second place, again, it's subject to change based on available data and information. And again, I will hopefully walk through. I'll be able to walk through some of the rest of these as we continue our discussion today. So, in terms of the annual capacity, up through last year, we installed, I believe, about 173, a little over 173 gigawatts annually of renewable energy. We look like we're tracking towards 200 gigawatts in 2020 and sustaining 200 gigawatts plus in annual capacity additions for each year beyond that. The market, as you can see from this, is largely being driven by 3 or 4 main renewable energy technologies, one being solar PV, obviously, onshore wind, offshore wind, and a little bit of small as well as large hydro is still making a reasonable contribution. That said, there is money to be made in in any one of the renewable energy technologies, as long as you know kind of where to invest and how to invest. Just looking at one of the questions real quickly, the data that we're showing is globally, by the way. So we're covering the entire global markets with this information. But if if you take a look and really dig into these numbers, there's money to be made if you're an investor or project developer with any one of the renewable energy technologies, as long as you dig enough and dig into where the opportunities lie. So looking at the cumulative installed capacity through the end of last year, we had about 2.5 gigawatts, or I'm sorry, 2.5 terawatts of global installed renewable energy capacity. We're looking at about 2.75, maybe 2.78 terawatts of global installed capacity by the end of 2020. And we're projecting approximately 6 terawatts of global installed capacity can be achieved by 2030, but it will necessitate about $3.4 trillion in project capex to be spent over the next 10 years or so. This projection, I'll explain a little bit as we dive in how we came up with it. But this projection is predicated on a few things that need to happen in terms of global policy execution, and is also taken in recognition of the fact that feed-in tariffs and CFDs or other commercial support mechanisms have actually been reduced or taken away. So the good news is, again, we anticipate the markets will be growing. And what I wanted to do was to step into each one of the renewable energy technologies and just provide a bit of a brief overview of where has the market development to date taken place, as well as where do we see opportunities to develop projects or invest. So with the bagasse market, it's largely dominated by Brazil. But the good news is, again, there are select markets where the investors and project developers would be able to gain some benefit. We're looking predominantly at markets like Ethiopia, Vietnam, the Philippines, Brazil, Guatemala, and Mexico. The interesting thing about this technology is that, in addition to being able to use it for power generation, there are also kind of ancillary benefits to having the raw material. And it can also be used to make biodegradable, materials such as tableware, and also can be used for heat. Heat production in addition to electricity production. So there are markets where the feedstocks for this and other agricultural byproducts are available. And so from that perspective, it's no surprise that markets like Brazil have taken more advantage of it. But we're looking at, again, a modest growth path for this, but nevertheless, an opportunity for growth. I'm just going to switch over to another system for the moment and show you a few things about and talk through the annual growth and cumulative growth. In addition to what I've shared, it's interesting to kind of look at the markets and take into account, in spite of the rather significant amount of hydropower. And again, I apologize if this is a little small on your screens, but you'll be able to kind of understand the trend. So the block of renewable energy capacity here that's shown in the pinkish color is hydropower. If I take that out, just for the sake of comparison, because it's largely dominated by historical large hydro capacity additions, you can see again that the markets are being kind of dominated by solar PV in the lighter blue, and then the onshore wind market in the darker green. And the message here is that, again, in spite of the fact that those technologies are kind of overwhelming a lot of the other fuel sources, technologies like the bagasse market or liquid bio for power generation, the waste to energy markets, and solid bio, geothermal, et cetera. A lot of these technologies are still necessarily growing, in spite of the fact that they may appear to be overwhelmed by the rest of the the rest of the market, the hydro and wind and solar portions of the market. If we look at generation as well, now this is the amount of gigawatt hours produced, and so this is showing just under, I think it's 7 petawatt hours worth of annual generation as of 2018, which is the latest year where data is available from reported through all the different governments and government agencies. Some of this data comes from the OECD, some of it comes from our own research, and some of it comes from the governments themselves who report the data with this type of a fuel source breakdown. So once again, you can see that for virtually all of the renewable energy technologies, the market's growing. If I take out the hydro portion of the share, what's interesting to note with this is the comparison between the onshore wind, which again is in the kind of forest green color, versus the solar market, which is in the lighter blue. The amount of generation that each one of these technologies produces is really intrinsically tied to basically the efficiency and the net capacity factor of each one of these technologies and fuel sources. So in spite of the fact that solar PV, again, if I go back to the annual capacity, you can see solar PV over the past 3 or 4 years has been one of the single largest, if not the largest, driver of capacity growth in renewable energy across the globe. But from a generation standpoint, there's still work to be done in terms of improving efficiency and net capacity factor on solar PV. The good news is, and we'll get to this in a bit when we talk specifically about the solar PV market, but the good news is that we are trending in a healthy and good direction with that, and we're anticipating growth in that market. So again, offering a bit of a summary on the biogas market. It's interesting to note that the market penetration for the different renewable energy technologies, if you think about something like biogas, which again doesn't maybe get as much love from governments in terms of the feed-in tariff support or the amount of investment that it receives, either domestic investment or foreign direct investment. There are still growth opportunities out there in the market. Countries like Thailand, for instance, are evaluating a number of different renewable energy technologies as they're displacing a significant amount of coal capacity. South Africa has feedstocks available, but it's an underutilized fuel source, basically, or for this type of market application. The other thing to consider is that even though we're only covering the power generation industry with the scope of this review today, obviously technologies like biogas and some of the liquid biofuels, ethanol and biodiesel, those obviously have significant implications for the transportation markets as well. And to the extent that feedstock is available and can be made use of, there are opportunities to to expand into or have spillover into the power generation industry as well. The CSP market, this one's interesting because obviously it's been a bit of a mixed bag in terms of the success for CSP. We like the technology generally, but there have been some issues around overall efficiency, and it looks at the moment like it's predominantly being utilized for things like industrial steam production and what's called enhanced oil recovery. Basically, it's taking advantage of the physical space that exists to install a CSP array in proximity to things like oil production or refinement. So, there are going to be opportunities for growth in the CSP market. If we look a little bit on the commercial side, this is on the left, you're basically looking at a view of the cost of energy for CSP. Again, this is globally, and then we've compared it to the global cost of energy for coal, natural gas, and petroleum, which have all been converted from dollars per BTU into dollars per megawatt hour for the purpose of this comparison. Certainly over the past 10 years or so, we've seen cost reductions in CSP, but we haven't necessarily seen enough of a cost reduction for the technology to see a significant amount of global capacity. We think there are kind of niche applications for it, but again, it will necessitate kind of digging down into the specific markets to understand where the opportunity lies. Unfortunately, OECD did not report data on feed-in tariffs specifically for the CSP market, but we're working on that as part of the report that we're putting together in conjunction with this this data that we will release an update in January once we have all the numbers for 2020, and at that point we're also hoping to have some more granular feed-in tariff data specifically for the CSP market. Geothermal, again, this is a bit of a niche play as well, although technically, you could theoretically do geothermal anywhere. It's more cost effective to do it in countries where you have kind of active volcanic activity, for instance, because then it's a shallower bore depth for drilling in to extract steam or water. So, Turkey's been a very big proponent of the geothermal market, Indonesia as well. And there have been some, markets over the years where the technology's been deployed and then kind of reined in a little bit. The United States used to have more geothermal than we do today. Some capacity was removed in 2001. The interesting thing about this is it's a technology that technically dates back to, I believe, about 1904 was the first installation in Italy, I believe. And ever since then, the technologies continued to improve. That said, the weighted average, or the capacity weighted average cost of energy for geothermal is somewhat flat. And again, compared to the global capacity weighted averages for coal, natural gas, and petroleum, it's a bit above the range at the moment. But there are markets around the world where coal, natural gas, and petroleum are above or well within the range. So you can see the kind of the high and low range. Oops, sorry. You can see the high and low range of the geothermal cost of energy, and again, there are countries in the world where the fossil fuels are actually within, if not above, that that segment of the market. We do have on the right, you can see the actual feed-in tariff data. So broken down by year, the bubbles correspond to the capacity that's installed at a given feed-in tariff point. And what's clear from this is that in spite of the fact that you've got some feed-in tariff going all the way up to about $36 or so, the bulk of the market is kind of down below the in the 18 to 17, $18 range, and we anticipate that that's going to kind of level off as long as feed-in tariffs are going to continue to be offered for this as a technology and as a fuel source. The hydropower market, and by the way, we're lumping in both the large hydro and small hydro, again, partially due to the fact that the data that's being reported does not necessarily differentiate between large and small hydro. That's something that we as a research organization will dig into and extract that kind of relevant information. But the good news is, again, there has still been some growth, and China has been kind of dominating the market. Although as of last year, they actually got overtaken by Brazil in annual capacity additions. But there are markets around the world that are still doing a significant amount of large and small hydro, particularly markets where there's kind of opportunity to not only exploit the resource, but also markets where you can actually take advantage of refurbishment and repowering of existing systems with more efficient generators. There are markets for instance, throughout Europe that are applying some digital technologies to improve overall performance and efficiency. This is really around how the assets are being operated and controlled, kind of price optimal power delivery to the market, that type of technology. So there's still a play to be made in the hydropower market, and there are still some prospects. But again, if I kind of go back to the annual capacity additions, just very quickly, you can see that over the past 20 years or so, the market's been, fairly finite, in spite of the massive amount of global cumulative capacity. But the reality with the hydro market is there will continue to be a decent chunk of market opportunity globally. So looking at the cost of energy, certainly hydro plays a lot better in global markets due to its obviously significantly long history. The data that you're seeing here for the cost of energies, again, reflects the coal, natural gas, and petroleum on a global basis, the global average year on year. And so, hydro is certainly a lot more cost competitive, but there have been, some spikes, largely driven by some of the capacity additions in the small hydro segment of the market, where, in spite of the fact that even if you look at the feed-in tariffs and CFDs that apply to hydro, you're not getting a huge amount of feed-in tariff capacity. The bulk of the market is still well below the $20 range, and we're projecting it's going to go down to about $9 by about 2030. But the reality is that we have been trying to help facilitate growth in global renewable energy markets by introducing feed-in tariffs. Some have been helpful in kind of facilitating that growth. Obviously, any kind of a subsidy that anyone wants to provide, the industry will certainly take advantage of it. But the reality is that there are it's a mixed bag in terms of the amount of capacity growth that's really driven in such a mature market and such a mature technology. Looking next at the liquid biofuel market, again, this is a technology where obviously the predominant use of liquid biofuels are for transportation purposes, which is fantastic. But there's a bit of opportunity for spillover and growth, particularly throughout the Asia Pacific region and Africa as well, where feedstocks exist, and there will be opportunity to leverage them for in this regard. The markets that are likely to see the largest growth potential, again, Africa and the Asia Pacific region, but basically any markets where conventional diesel technology, for instance, is being used today and could be retrofitted with biodiesel. Those are likely to be the largest segments of growth and pockets of growth. That said, the markets outside of those which have significant liquid biofuel production, ethanol, biodiesel, etc., it really comes down to availability of things like feedstocks, and so that's kind of the single largest component to the use of this, both for transportation fuel as well as power generation. Moving into the marine energy market, we like the market in spite of kind of the fits and starts, and and also in spite of the fact that it's been around for a number of years and hasn't always seen and hasn't always gotten the love it deserves. Basically, most of the market is still kind of in, we'll call it a demonstration and development phase. But what's interesting is, there's been some discussion about the possibility of dedicated CFDs or feed-in tariffs for the marine energy market. The interesting thing about cultivating a new market, particularly facilitated by any kind of a subsidy regime, is the bigger the subsidy, the wider the net you cast in terms of the availability of new technologies. However, the flip side to that is, if you introduce a very large CFD or feed-in tariff for supporting and cultivating a relatively small and emerging renewable energy technology, you also run the risk of allowing companies to come into the market that may not be able to survive without that subsidy. So the level of CFD that's introduced or feed-in tariff, the level of or the ramp rate for how that CFD comes out of the market is something that really needs to be discussed and understood, because there will be companies that have sufficient resources and scale to be able to address some of the technological and commercial challenges in the market. But that's a key component here, is understanding the difference, both from the policy standpoint as well as the engineering and technology side of things. There's a lot of technologies that are technologically feasible, but they're not necessarily commercially viable. And so that needs to be understood as we dig in. Now, the the offshore wind, onshore wind, and solar PV markets are the ones that are probably going to get a bit more attention. Again, not only because they're kind of the largest segments, but it's really just where the growth potential is. You've got solid capacity factors for these technologies, and you're seeing, particularly in offshore wind, you're seeing some rather explosive growth coming up in the next 15 to 20 years. We're going to be surpassing the 30 gigawatt installed level in terms of cumulative capacity by the end of 2020. But we're actually projecting some substantial growth in this market beyond 2021 and 2030, all the way out to 2050, as some new technologies around some of the foundations come into play, and you're going to start seeing much improved return on capital, basically, for we're getting more capital efficient. Let me basically put it that way. For the amount of normalized project capex that we've invested in the past, you're seeing a much better rate of return on this with offshore wind these days. It's getting down in terms of the power purchase agreement prices, and these have all been adjusted to incorporate the feed-in tariffs and CFDs. This is based on our data and our research. So, as I mentioned before, there's a bit of work that went into cultivating, some of the data sets. Some of them come from publicly available sources. Some of them we've had time to go through and make a very detailed account of the asset catalog within each one of the renewable energy technologies. This has been one of them. The good news too for the offshore wind markets is that there's been a significant reduction in the PPAs, the project capex, and the equipment costs. So this is just a chart looking at the variance of the normalized cost for an offshore wind turbine. So this is millions of dollars per megawatt of rated power on the turbine. What you can see from this is, there's been a band range in between about a million per megawatt all the way up to about 2.5 million per megawatt. If we take this and break it out by the time frame, so this is literally looking at exactly the same data, just broken out over time. You can see for some of the OEMs, there's a bit of a horseshoe-like curve here, where back in the 1990s, we were down at around $1 million per megawatt. It peaked at around 2015 or so, and is poised to come back down through various factors like economies of scale achieved through the capacity growth, as well as cost competition for the sector. So, as I mentioned, we're getting more capital efficient with offshore wind as well as some of the other sources, but it's interesting to note how things have progressed. And the one other thing I'll mention about the offshore wind sector, we get asked all the time, when is the floating offshore wind foundations, when are those going to take off? Well, there's a couple of contributing factors to this. One is that as long as we have market capacity to support fixed foundations like monopiles, jackets, etc., that capacity is likely to get built first, because it's going to be inevitably a little bit cheaper than floating to start with. But out of about 584 gigawatts of proposed and consented and under construction projects in the offshore wind pipeline over the next 15 years or so, a decent chunk of it, I think it's about 133 gigawatts, is actually the floating offshore market. And one of the things that's interesting to note about offshore wind is it's growing at such a pace that there are constraints amongst some of the supply chain, which we've talked about before in previous research publications, as well as some other webinars that have been done. But the reality of that is the constraints in crane vessels for offshore wind may actually spur the growth of the floating offshore wind market. We're anticipating that, driven by a couple of things: the ScotWind tenders in the UK, as well as some of the other competing market factors. You may start seeing floating offshore wind take off in about 2026. And depending on the availability of crane vessels for conventional fixed foundations in offshore wind, you may actually see a pace of growth in floating offshore that may surprise a few people. China is the single largest country, as shown here on the chart, that will be able to take advantage of the floating offshore market. But the UK and Japan are probably the markets that are most likely to exploit the resource in a significant way early on, because they're already kind of the most mature in terms of evaluating the technology, undertaking demonstration projects, etc. So just moving into the onshore wind market, the story here is partly driven by cost of energy reductions, but also driven by the fact that, other than hydro, onshore wind is probably one of the more cost-effective investments that can be made, as well as one of the most efficient in terms of a net capacity factor basis. So, there's a significant amount of pipeline globally, and the markets globally will continue to be driven by major markets like China, the United States, but don't discount markets like South Africa, Australia, Sweden. There's repowering opportunity throughout Europe. Obviously, in Germany, the onshore market is facing a huge potential for repowering, but it's still policy driven. In that, in order to repower a renewable energy asset, you have to go through a repermitting, which may necessarily involve environmental permitting to be reissued, etc. And the potential complexities of that process, coupled with the time frame that asset owners and operators need to see a specific type of return, as well as their investors, I suppose, that will be a governing factor on whether or not assets get repowered as opposed to just dismantled. And so we hope that, from a policy standpoint, we can acknowledge the fact that there is a potential for there's significant potential here to do a lot more on the onshore wind market. Similarly, looking at the PPAs for onshore wind, you're seeing over the past 5 to 7 years a significant reduction globally. It's one of the things that's contributed to the cost competitiveness of onshore wind against fossil fuels. We're anticipating that by about 2035, you're not going to see a PPA inclusive of a CFD or feed-in tariff above about $68. Most global markets are actually taking away any kind of feed-in tariff or CFD, largely due to the cost reductions and the cost competitiveness of the technology at this point. But the weighted average range looks like it's projecting down to about $42 by about 2035. So, again, we've got a little bit of data that's forward-looking, but we're still gathering data and gathering information about about the markets. just by the way, I haven't been ignoring everybody's questions. We'll get to those at the end. I just wanted to get through the market overviews and then explain a little bit about research methodology, and then we'll do Q&A. So we're just coming up now on the solar PV market. The obvious growth potential here has really been about cost reductions. It's mentioned several times. On this one, the laundry list that's been kind of rolled out of markets globally that have installed at least a gigawatt in the past year is enormous, and we expect that to continue, largely driven by these curves. Number one on the left, the cost of energy curve for solar PV. The amount of reduction on a capacity weighted average for solar PV cost of energy in the past 10 years has been tremendous and continues to trend down. Again, in some markets, you've got PPAs being signed that are, in the, $20 range, $20 to $25 range. Some of them have even been, I think the record low is in Saudi Arabia. I think that's still the cheapest one. I think it was about $17 so per megawatt hour. So that's a tremendous amount of potential here for the solar PV market. Again, driven in part by the amount and the volume of feed-in tariffs that have been offered to solar PV. Clearly, it's been worth it, and clearly it's been working as a mechanism to drive the market. So if you look at the chart on the right, we're anticipating that the weighted average of feed-in tariffs for solar PV is going to continue to be a pretty decent clip, and probably one of the highest amongst all the renewable energy technologies by about 2030. So we're anticipating a weighted average of, top end of the range in terms of weighted average of about $18.50 per megawatt hour, and nothing likely to exceed about $29 in CFD for the solar PV market in that same time frame. So the solid biofuels, excluding things like the big gas market, which I briefly touched on before, and the waste to energy market, which I will touch on separately, because those technologies get reported separately, or at least the data for the power generation from those technologies gets reported separately by various governments and agencies around the world. The solid biofuel market is, of the, not wind, not solar PV, and not offshore wind, not hydro. Solid biofuels are actually the next biggest chunk in terms of market share of the global renewable energy sector. And, the contribution that can be made by things like wood pellets or rice husks, et cetera, for both combined heat and power, as well as exclusively power generation, is promising. But again, as with any kind of biofuel, whether it's liquid or solid, it really depends on the availability of feedstocks, and the countries that have access to things like agricultural byproduct, or the ability to cheaply produce things like wood pellets, are going to be able to take advantage of this segment of the market. In terms of the cost of energy for solid biofuels, it looks pretty good, and it looks reasonably competitive with some of the fossil fuels. The challenge in growing this segment of the market is, whether or not you can see, again, if I just back up a couple, to the solar PV, if you look at the cost of energy curve there, clearly solar PV has been coming down. If we go back to the cost of energy curve for the solid biofuels, it's relatively flat. And what that implies is that a lot of the cost reduction has already happened prior to this time frame that we're looking at for COE. But there's still the possibility of technology being introduced that could unlock this market segment further. And so that's why we remain optimistic that, again, they continue to receive a decent amount of feed-in tariff support globally for solid biofuels. And as such, we anticipate that there will be some growth potential for this segment of the market. And then last but not least, the waste energy market. What we've seen here is really taking advantage of a need to reduce landfill, and again, having the availability of things like landfill gas or solid municipal waste that allows for this technology to be introduced. But there are markets specifically like China, Japan, which are, they not only have the availability, but they also have the fundamental need to reduce landfill capacity by utilizing this type of technology. Unfortunately, with this waste to energy, we don't have the LCOE, the levelized cost of energy data, but we do have the feed-in tariff support, again, as reported by the OECD for various global markets around the world. The data is indicative of the fact that the bulk of feed-in tariffs for this technology are again kind of in the $20 and per megawatt hour and below range, and we anticipate that it's going to help drive a modest amount of growth in this market. So just to summarize, and again, if I maybe back up to the solid biofuels, you can see that some of the technologies that are growing the most, like solar PV, for instance, have an LCOE curve that is significantly reducing and an efficiency and net capacity factor that is driving growth. If you look at other forms of renewable energy, like the solid biofuels here, or some of the others that have been shown, like geothermal, where it's relatively flat, there are still possibilities for technological innovation to help drive further growth in the market if it's going to fundamentally change the LCOE equation. And that's kind of the key message here in terms of how we're able to see growth in any one of these market segments globally in the future. Unfortunately, I want to start taking a few questions, so I'm not going to go through the full scope of our research methodology, but suffice it to say that what we've been doing as a company over the past 10 years is really trying to drill down into not only the building out a view of the global markets through the market level statistics, most of which are kind of reported by the various governments. But if for some of you who are familiar with our work, they know that what we've been doing is actually building an asset geolocation catalog. We've literally mapped out almost all of the 399,000 wind turbines in the world. And we're continuing that process and expanding that capability into all this, mapping out all the solar PV assets, and then adding a lot of the other commercial data to this asset catalog. So we predominantly focused on onshore and offshore wind, but we would obviously benefit from the continued and ongoing support that we get from our customers and partners to continue building out an accurate picture of the global markets. So with that, I'm going to transition here and take a few questions. I see we have a number of them. Let's see. Years, I think. Okay, so question on the CSP market. Does the cost per megawatt include environmental attributes, RECs, sales, etc.? I believe the answer to that is yes. I would have to confer with one of my colleagues, but I believe the cost of energy data includes all the externalities plus all the feed-in tariffs that would be applicable to this. The next question, the waste to energy is not included. We did address that one, so I think that's fine. Let's see. Where do you see the growing countries like India? So, okay, there was a question that came in about India. You know, the interesting thing is there's been major global markets like India, like China, that have all set very, very ambitious goals for renewable energy capacity growth, but it needs to be met with investment. And that's been kind of the sticking point that we've seen is there are many politicians out there with ambition, but the reality is, are we really seeing the necessary level of investment that is going to match that ambition to actually build out the markets? One of the things that I didn't get a chance to talk to was the fact that moving forward, we're actually going to be building a calculator. It's one of the research priorities for us in 2021. We're going to build a calculator that will allow anybody, whether you're a project developer, financier, or even a government, you know, if you have, let's say, 10 million, 100 million, a billion, or half a trillion to invest, what are you going to get in terms of capacity additions? You know, what can you and should you expect in terms of, you know, the kind of global capacity additions? So let's see. China-specific renewables curve. So there are a few questions here on like market-specific data, like China and the United States. Yes, we do have market-specific data, not just global level data. Unfortunately, obviously, we don't have time to dig into this in this type of a forum, but please contact us after the event. You know, we'll not only be able to kind of dig into it on an individual market basis in the future, but we have a lot more granularity to the data in some of the market. So, all right, let's see. We've got a question. You know, ethanol in the U.S. has driven food stock prices up. Doesn't seem like that's sustainable. That is also that's a great question. And you know, the reality for things like the liquid biofuels, especially, is since they're predominantly used for transportation, the power generation segment only gets a bit of spillover. And as you know, things like food prices continue to fluctuate, you know, both from a transportation standpoint as well as you know, power generation use, you'll see fluctuations in demand. I mean, this is, frankly speaking, this is also one of the key components to commodity prices and the availability of resource, even when you're talking about fossil fuels, right? You know, availability of natural gas, availability of petroleum will necessarily drive markets and drive cost of energy in you know, the power generation segment, as well as the primary segment. In this case, for ethanol, it's, you know, its primary use is as a transportation fuel. All right, next one. Oil and gas is currently looking at solutions, including marine power. Technically, yes. The one thing I didn't mention about marine power is that I think where it's going to find a niche is in potentially co-locating with an offshore wind installation. So like an ocean current turbine mounted on the same monopile foundation or jacket foundation, for instance, as an offshore wind turbine, or even on below a floating foundation, could actually be an applicable use of the technology, particularly as you look at trying to take advantage of using the ocean current turbine or tidal and wave turbine to potentially power some of the ancillary systems on, to help facilitate something like a black start, for instance. If the turbine went down, you might have the ability to do that. So I think the jury's still out a bit on the marine market segment, but we're optimistic about it. The next question was on where is Mingyang, CSIC, the Korean companies. We do have the data for those companies. It was on the chart that we showed, showing the pricing. They're kind of broken out in the other bucket here. So a few of the companies, Mingyang is on here, and some of the other Chinese companies, but we had to kind of lump a lot of the other companies together, unfortunately, just for the sake of space. But again, we do have detailed data for all the currently installed offshore wind, as well as the a decent chunk of the pending. The growth of CSP has been less than expectations. I think we touched on that before, but just to kind of reiterate, I think the reason for the growth of CSP being less than expectations has really been down to the efficiency of the technology. The reality is there are technologies that have a decent amount of technological feasibility, but there's going to be a necessary improvement on the efficiency of the power generation. All right, so next one, let's see. Offshore wind development leveraged. The next question on the U.S. offshore wind market. The short answer is yes. I mean, the reality is it's, the political regime in the U.S. or literally anywhere else is really, it's almost there to potentially hold back a market as opposed to, facilitate in some cases. We've based on a cost of energy standpoint. Again, if I just kind of jump to the PPAs for offshore wind, if again you take a look at the PPAs that are being executed for offshore wind, the cheaper that it gets, the more you're going to see the technology get deployed, including in the United States and other markets around the world. So again, the short answer with that is the change in political administration in the United States should get things moving a bit faster than they have been. But the market potential has always been there. I mean, we've been touting the U.S. offshore wind market for the last 10 years, and we're glad it's finally starting to get off the ground. The biggest leading indicator to that is the political certainty will unlock investment in vessel development and port infrastructure, which are kind of the leading indicators of the market growth. So we're starting to see that happening, and we're excited about the prospect in the future. All right, the next question was, where can we find the mapping of the wind assets? That we can talk after this event, and we'll be sending out a bit of information after the event to address where you can get access to that. We do have an online platform, and we'd also be kind of happy to demonstrate that. But we'll take care of that after the event. Let's see, the supply chain ready for the huge appetite of the developers and investors. I'd almost, that's a great question. I'd almost say it's a bit of a mixed bag in terms of, the supply chain will unlock its value when the investors feel like there's political certainty and are ready to open their wallets. I mentioned before that we want to be able to build this calculator for developing market projections in the future, so that we're, if I back up to the projections that I showed earlier, looking at these kind of forecasts, it's lovely to be able to say, like, we expect the market to grow. But the reality is, how fast and how much the market really grows is predicated based on the level of investment received, and is also predicated on, the policy support that is in place. If there's not going to be policy support, we're anticipating that there will still be growth, but there are usually steps involved in kind of unlocking the supply chain. There may be points in time, like we're seeing with the offshore wind market. I mentioned the supply chain availability of crane vessels, and whether or not that's going to potentially be a hindrance to the global market growth. The short answer is, if it is a hindrance, it's a modest one. By the way, you haven't heard me talk about the impact of the pandemic. It's largely been because, even though we obviously had a moment of pause there back in February, March, April, May, when we were initially dealing with the impact and lockdowns, et cetera, the market is still looking like it's poised to overcome this and continue growing in spite of any constraints that might have been put in place. So the good news is, there is still a moment here where there's an opportunity for both governments and the supply chain to kind of come together, and we remain optimistic that, in spite of the fact that there may be a few fits and starts for the supply chain, that we'll get there in the end. And this kind of growth trajectory and our projection up to about 6 terawatts of installed capacity by 2030 should be, it might sound ambitious, but it's actually achievable. Again, going back to my comment earlier about India, if you're willing to open your wallet, then it'll be achievable. Thoughts on floating solar plant cost and feed-in tariff? That's another great question, and specifically talks to or addresses, whether or not we need to have like a dedicated feed-in tariff for like a sub-segment of the market. Overall, floating solar makes a lot of sense technologically. From a cost standpoint, you aren't necessarily, you're not necessarily there the way you are with like a fixed mount land-based installation. But again, there might be opportunities for co-locating a floating solar with maybe a lake-based offshore wind installation, for instance, similar to what I mentioned before with the marine energy market. So we like the technology overall. We think there's growth potential there. You've got, I think, out of global installs for solar overall, floating solar is, I want to say, like around about 400 to 500 megawatts. I'll have to confer with my colleagues to make sure I'm not getting that completely wrong, but it's a small but very promising segment of the market. Which country has the best renewable produced I'm assuming that's per capita. I actually don't know the answer to that off the top of my head, but we'd be happy to investigate that, and we'll get back to you. Let's see. The next question was, do you see distributed wind becoming a factor? That's a really great question, and something that kind of people go back and forth on. The short answer is probably not anytime soon. There's a market for it, to be sure, but it's on a global basis. Markets like the United States, China have probably been the biggest proponents of small and distributed generation systems. But largely speaking, the wind energy market is going to be predominantly driven by utility scale technology. There are niche applications for for the smaller scale wind, what's typically referred to as small and medium wind, where you might have tip height restrictions. So for instance, you can't install a wind turbine above a 150 meter tip height threshold due to restrictions from aviation administration officials, et cetera. So there are kind of niche plays and niche applications, but largely speaking, the precipitous rate, and since you have offshore wind kind of co-located with load centers, it makes a lot of sense to take advantage of every technology that you can. So we're a little bit over the original scheduled time. I can actually answer a few more questions, but what I think we might do is, and I'll maybe invite John back into this conversation. We might take some of these questions and follow up individually with some of you after this event, just for the sake of time. I know many of you may have other things on your agenda as well today. But like I said, I'll at least try to address a few more questions here. And John, I don't know if you had a specific time frame on this.
Yes, I mean, so there's a lot of questions coming in thick and fast. So thank you to everyone who's still here. I am noticing a few people dropping off, so that would probably indicate that it's coming to an end. I think we can take a couple more questions, but I do have a hard stop within the next 5. So if you wanted to maybe take your top 2, Philip, and then we'll end the webinar. Just for everyone that's still here, if you do have questions for Philip, I'll be sending out an email tomorrow with this recording. And you can obviously reply to me, and I can introduce you directly to Philip, and you can have a conversation with him. His system contains a wealth of information, but I don't want to take up your valuable time, Philip. So over to you for the last 2.
I really appreciate it. I honestly wish we'd probably be here for another 3 hours if I addressed everyone's questions, but. Just a couple more. So there's one here, how much variable renewables can a grid tolerate? The reality of this is some markets may necessitate having things like energy storage technologies or better grid management technologies to be able to take advantage of the increasing penetration of variable fuel sources like renewables on the grid. But most of the grid management initiatives that are being, grid modernization initiatives that are being undertaken at this point are certainly looking at demand and capacity and the variability of it. I think we've demonstrated that, in certain markets, you can have upwards of 40, 50, 60% market penetration from renewables and still survive and thrive. I mean, there are markets like Costa Rica, for instance, that have gone more than, I think, 300 days last year on renewable energy generation alone. Now, that includes hydro, which is a little more like a conventional baseload plant, and in that you can kind of throttle the fuel source, so to speak, and manage your baseload that way and accommodate the variability. But increased penetration of wind and solar on the grid actually provides a bit more stability. That may sound counterintuitive, but if you're increasing the penetration of something that would otherwise be variable, you for any one wind turbine or any one solar array that might have a period of underperformance due to either variable wind or sunlight conditions, you may actually have the ability, with greater penetration of wind or solar, to kind of make up for it if you have enough distribution throughout your electric network. So, you know, high renewables penetration on the grid is not as much of a problem as many people make it out to be. You know, again, if you kind of dig into the underlying technology and the underlying grid management required, we believe that there's sufficient, you know, sufficient technological opportunity to take advantage of the, you know, an increased penetration of renewables. I'm just trying to scan through the rest of the questions. I want to try and make sure that everyone has a chance to get one in. There's a question here on green hydrogen. So I didn't get a chance to talk about energy storage or hydrogen today, but I'll just briefly mention. So in spite of the fact that what we covered today was mostly on the power generation side of things, there are obviously, you know, as was discussed with things like the liquid biofuels and biogas, there are kind of ancillary uses for some of these technologies. You know, like the primary use may be for transportation or otherwise, and a secondary usage may be for power generation. You know, whether you want to call it, you know, gray or brown hydrogen versus blue or green hydrogen. You know, so technologically, there's nothing particularly new. There is increased and improved efficiency with some of the hydrogen production technologies, and particularly if you're going to utilize for, you know, in fuel cells for storage applications, or if you're going to use hydrogen as a potential, you know, transportation fuel source or for other purposes. That said, you know, while we're enthusiastic, just I guess the rest of the market is about hydrogen at this point, just understand that, you know, it's going to be probably a good 7 to 10 years before we're really in a stable, you know, revenue generating path with hydrogen. There's going to be some commercial implementation hurdles that need to be overcome. Again, this goes back to my comment before. There are differences between technological feasibility and commercial viability. So overall, we like the technology. We like the direction it's going in. We certainly like to see the level of investment that's been committed to it. But there are kind of niche applications where, you know, for instance, if you can use hydrogen production to offset what would otherwise be negative pricing from renewable energy. So for instance, in the ERCOT market in Texas, you might have a good case to make for hydrogen production as a secondary form of power offtake for onshore wind to avoid negative pricing in that market. So there are kind of niche plays that need to be considered first, but we ultimately do see that the market will grow. So with that, again, thank you both to John and to Reuters for putting on this event. I also just wanted to send some holiday wishes to everybody. Please be safe and enjoy yourselves. And you know, as I mentioned before, my company Intel Store was founded about 10 years ago, and we're really quite grateful to everybody that's helped us over the past 10 years. All our customers, all our partners, and all my colleagues who have contributed to our growth. So we look forward to working with you again in 2021. And with that, I'll turn it back over to John.
Not at all, Philip. Thank you so much for your time today. I'm seeing some very complimentary comments coming through in the chat function. So big thank you to you and your time putting that together. For everyone that's still with us, thank you for staying in. We've had over 50 questions and they're still coming in. So just goes to show it's wanting to know what's happened this year, wanting to project where we're going to be in 10 years' time across all of the renewable channels is fascinating stuff. So thank you very much for that. As I said, this is all we've got time for, but that doesn't mean the the conversation with Philip stops here. I'll be sending out an email with the recording tomorrow. And so anyone that has any further questions for Philip, do drop me an email. You can alternatively just contact me directly on jon.harman, HARMAN @thomsonreuters.com, and I can loop you in with Philip. Without further ado, I would like to say good morning, good evening, and good night, depending on where you are based. Thank you to Philip. And if I don't hear from you or don't have a chance to communicate with you before, Merry Christmas. Hope everyone has a good festive season. So thanks very much for tuning in, and take care, everyone.
Thanks.